Hello, everybody. Welcome to the weekend edition of the Market Briefing. Got a lot to look at today, so we'll get right into it. But first, quick little disclaimer. Everything we do here is for educational purposes only. We are not investment advisors, and we do not provide investment advice. All trading is at your own risk, and your investment decisions are your own. Okay, so let's take a look at what we got coming up this week. We have a very busy week on the macro calendar. Monday, we've got ISM Manufacturing, Purchasing Managers Index. That's fairly important. It's, inflationary type data, so that will be closely watched. Also, there's some holidays around the world. China's closed for the first couple days of the week. Japan is closed. Great Britain, I believe, is closed on Monday. All of this for May Day and whatnot. So that throws a little bit of a wrench into things, but not too much. Tuesday, JOLTS job openings. This is fairly important data as far as the economy goes. It gives us a really good sense on, how the economy is doing, how tight the job market is, and whatnot. Wednesday, FOMC day. This is the biggie. This is the one that we've all been waiting for, and have maybe the market's been setting up for this. I don't know. I mean, it seems like we're kind of overdone what's happened in the market in the last week or so. Anyway, so we have FOMC statement where they tell us their outlook for the economy. We have the Fed funds rate. This is the overnight rate the banks pay to borrow money. And we have Jay Powell's press conference. So all of these are really important. And it'll be interesting. We pretty much know it's going to be a 0.5 point rate hike. But we don't know just how hawkish they're going to be going forward. And I think that one of the questions that Powell's going to get asked is, would they consider a 75 basis point rate hike? So, 0.75% at the next meeting or any future meeting. How quickly are they going to be raising rates going forward? So I'm sure he'll be asked that question. It'll be really interesting to see what the answer is. And the answer to that question might depend on how the markets behave over the next few days. If we continue to melt down like we have been, he may try to be fairly dovish. He might try to please the market with some statements. So it's going to be really interesting to see how this all plays out on Wednesday. And maybe this is the catalyst we need to put a change into how this market has been operating lately. Thursday, we have unemployment claims, another, a fairly important data point, but we have that every week. And on Friday, we have non-farm payrolls. This is really important. It tells us the unemployment rate, how much are employees being paid, like what's our average hourly earnings. Oops, sorry for the typo there. I spelled that incorrectly. It's very closely watched, and it's something to end the week off with. So, even if we do, let's say after Wednesday, we do get a nice bounce in the market. If this employment data doesn't come in the way the market wants to see it, that can throw a wrench into any rally that may be created. Flip side of that is, if we go down a little bit on Wednesday after, if the FOMC doesn't please the market and we go down, but the non-farm payrolls does please the market, that can also change a downtrend into an uptrend. Because it is such an important piece of data. We also, of course, are deep in earnings season, and we have a lot of earnings coming up this week again. Not as big a week this week as last week. We had most of the FAANGS report last week, and they were moving markets for sure. So tomorrow morning, I guess actually sometime today, Berkshire usually comes out on the Sunday. So we should be hearing from Berkshire Hathaway if we haven't already. And so that's, for tomorrow morning. What have we got after the close on Monday? Nutrien. This is one of the material stocks that we've been watching. This is, fertilizer, right? Potash. So this might be closely watched. MGM Resorts. So Tuesday morning, we've got some oil companies. We got BP. What else have we got? Pfizer. Yeah, nothing too exciting on Tuesday morning. After the close on Tuesday, though, AMD. Let's see how the semiconductor space is doing. Airbnb, Starbucks, Lyft. So there's a number of stocks in here on Tuesday after close. They're going to be very closely watched. Before the open on Wednesday, Moderna, CVS Health, some hotels and whatnot. On Wednesday after the close, more oil companies. Uber, that's a big one. Twilio, Etsy. CF, Steel Company. Wednesday after close, another big day. Thursday before the open, Shopify. I know I'll be watching this one really closely. Crocs will be watched really closely. We should maybe look at the chart of that one. There might be some interesting stuff going on there on that chart. Datadog is going to be interesting. I know some people in the Discord are watching Datadog. We've got some more oil companies, some cruise. Nikola, that one's always amusing. Block. I'll never get used to calling it Block. This is Square to me. After the close on Thursday, and Fubo and Lucid, Cloudflare, a number of DoorDash. That should be interesting. Number of closely watched companies on Thursday after the close, and Friday morning you got DraftKings. I know a lot of people watch that one. So pretty busy week. But none of the monsters really like we had last week. Although you can probably argue, with AMD and Uber in here, Lyft maybe, there's definitely some big names, and some names that are capable of moving the market to a degree. So that's our earnings calendar for the week. Let's get into taking a look at. We'll look at the indices. We'll look at some important commodities. We'll look at some sectors. Nice setups. Not really. So let's start off with the SPY, as always. Okay, so this is a chart of the S&P 500 represented by the SPY ETF. And you can see that, we are really rolling over here. And we have come right down to a really important support level. This is the low from the February 24th low. You can see that we broke through that double bottom on Friday. We had been holding up there nicely. Let me zoom in a little bit here. We had held that and bounced, reversed really strongly. We had this is almost a morning star pattern, but not quite. That should be a doji, and it should have gapped down here, but very close to a Morningstar pattern, and it's kind of got this U-turn in here and then completely fell apart. Big reversal here. The only good thing going about Friday was that it held this February 24th support. It sure doesn't look like, and when we look at the rest of the market, it doesn't look like this is going to hold. It looks like this is going down farther, and down farther means where's our next support? The top of this gap from back here. That was the gap that was printed back here in, just over a year ago now. And that gap is still open. We come down to that. I bet we close that because, once you get down into here, once you get into 404, they're going to push this down and test 400. That should support. If it doesn't, we're coming down to 392, this next level down here. It really looks like, it really looks like more downside is coming in the S&P 500 and the rest of the major indices. Let's look at the NASDAQ. You can see this has already broken through those February and March lows. It looks like it's coming in to test the 300 level. Again, no reason to believe that this is not going lower here. That being said, though, it's Friday was yes, this is important. I should point out that Friday was the last day of the month, and we often get this window dressing. We often get unusual moves like this on the last day of the month, last day of the quarter. As funds are rebalancing, they're trying to dress up the books a little bit. Maybe they're getting, maybe they were getting a bunch of their larger tech off the books for whatever reason. They wanted to show their show the holders of the fund that they're they're getting out of some of these tech stocks that have been falling apart. So you do get a lot of window dressing, and if a lot of this move on Friday was window dressing, then that does give there is an argument there that we could have a nice strong reversal on Monday, tomorrow. I don't really buy it. I mean, we talked about this last weekend as well, how maybe we do get maybe we get a V bottom in here, and it seems to me that right here on Wednesday, and Thursday, there was our chance for a V bottom. And we gave that up on Friday. So I really think we're going lower here. Hopefully this 300 level supports. Russell, small caps. They've fallen apart as well, of course. And you can see we've also got this gap going back to, this gap here goes back to November of 2020. And it sure looks like we're coming down to test that. So, the top of that gap's in at 170, and the bottom of the gap, I think, was 165, 166. It's not going to take much for us to get down below these lows and break down. And I think it looks like they're going to continue to sell this thing. There's not much support in here. What else do we have? The micro caps. Same kind of thing, when we broke out of this channel, we're just kind of falling apart. We still got Thursday's low, still above Thursday's low. That's about the only bright spot here because there's a lot of dead air here as well. So this can fall fairly rapidly once it gets going. Volatility index, you can see we're coming up now near these highs from the last couple of months, not that far off. Now that has acted as resistance, a number of times, and actually if we look even farther back in the past, we can see that that's a pretty important level. So this, this should give us a little bit of hope that maybe we can start rolling over there if we do come up into it. If we break through that, it could get really ugly. We don't want to be looking at these kind of highs we had in the COVID crash. That would just be that would be brutal. So yeah, let's hope we see VIX start to slow down this incline here and start to roll over once and for all. Yields. So this is interesting. Yields kind of they've sort of topped out briefly here. You can see they had this fairly steep uptrend. That uptrend was broken. So we could bring this uptrend line down to here now. But we do have this base here, and this is a fairly bullish looking pattern. So, I'm not saying that that yields have finished going up by any stretch of the imagination, but it is nice to see them pause a little bit here. Next up is commodities. We'll look at gold, and we can start by looking at gold. I do want to point out one thing before we look at commodities, and I should have done this actually in the last couple of weeks. The reason I didn't is because I don't have the US dollar index on. I don't have data for it on eSignal here. First we'll look at gold, and you can see that this is a really important inflection level here. This 1911 or 1900 area on gold is really important. We can see that prices interacted with this a number of times in the past. And we've been going back and forth across this a little bit lately. It finally sort of gave it up here this week, but did find support at this 1875 level, where it had acted as resistance and support in the past. Bounced off of there nicely and came up, and we've closed right at that 1900 area again, or sorry, above the 1900, above the 1910-ish area. Which is also sort of like this downtrend line that we'd had in here earlier that we tried to break out of. So this is a really interesting place for gold. Should be really interesting to watch and see which way this goes over the next few days. Kind of looks like it wants to sneak its way up. This will be heavily affected by the FOMC meeting on Wednesday. So it may just chop around until Wednesday. But yeah, I mentioned the dollar index, so I'm going to move over to TradingView really quick. And so this is the US dollar index. And the reason I started talking about this when we started talking about commodities is because normally commodities move inversely of the US dollar. That's not really been the case lately until very recently. You can see that, we know that, most of this year and beginning actually really, last year, commodities have been moving up most of this year along with the dollar, and that's unusual for that to happen. However, once the dollar started getting really steep in around here is when we started to see commodities, but actually back around here. When this started going up really steeply, that's when commodities started to kind of slow down and roll over. And you can see this, you see this when we look at some of the charts, of oil and copper and some of the metals. Now, the dollar index is coming to a really important level here. You can see we're just above, we closed right at this little double, these two highs here, this little tweezer top right here. We got to the highs that it had been here back in January of this was, we're looking at, by the way, we're looking at a weekly chart here. This was December to January of 2016, 2017. And you can see that this level, going all the way back to, 1989, has been a really important level. So, is this ready to break out and do a move like this? Is it going to poke its head up, do a little prairie dog where it pokes its head up and then comes right back down? Or is it going to roll over right now? I don't know the answers to these questions. I'm leaning towards this starts to roll over, and if that rolls over, we see a push up in commodities. Now let's move to a daily chart on this. I think you get a better idea why I think it may roll over, because it's already started to roll over, right? This came down on Friday. So, yeah, I think we can see this continue to come down a little further. Maybe it comes down to this area and starts consolidating down here. But if this continues on its way down, we should be, taking a serious look at some of the commodities, because we have been given an opportunity in the commodities, with a bit of a pullback. There has been maybe a bit of a buying opportunity. So let's get into some of the other commodities. We just looked at gold. Silver. Silver just rolled over, and really quite a steep decline here. It just cut through all the moving averages, but it looks to be this decline is starting to slow down a little bit. It looks like it's getting a little bit more indecisive, and even if there was more decline, this 22 level looks like really strong support. So we might be ready to see a turn up in silver, and if we see a turn up in silver, we probably see gold continue on the way up. However, the gold miners, got a bit of a they had a bit of a gap down. You could call that maybe a messy bear flag. What could be an interesting result of this gap down? If this were to gap up again, then we could call that an island reversal. And if it gapped up into here and started going, this would be very bearish, and I would be looking for much more upside in these gold miners. But so far, the jury's out on that. Right now, this is kind of more like a bull flag than anything else, or sorry, a bear flag than anything else. Copper. We were looking at this last weekend, and I think during the ticker talk on Thursday. But you can see this has kind of got a weird little downsloping bear flag. And I mentioned on Thursday that those usually fail. They don't actually break out to the downside. They usually fail by breaking to the upside. So still watching for that. You can see it did try to, if I zoom in a little bit more, you can see that a little better. It did try to break out to the upside on Friday and then pulled right back in here. So it'll be interesting to see where this goes from here. You know, you want to watch out for this little double bottom or these two lows right here. And so that brings us to Freeport-McMoRan, one of the big copper miners. This bear flag is still very much intact, and we saw on Thursday how you might play that, how you might enter this, you know, on a break below. At the time, we were looking at saying entering perhaps on a break below the Thursday low, and then you would have put a stop, you know, somewhere above this flag, you know, above that Thursday high. Now that range is widened out now. You'd almost have to put your stop up a little higher here, and you want to bring, you know, your entry down here if you didn't already get in it once it came down here. But yeah, with this widening out like this is a little less favorable, this trade now. TECK Resources. This one's kind of messy, really indecisive looking. Sort of looks like it wants to go higher, but you know, if the market behaves and we get a little bit of juice in copper, this might be a good play here, because it is kind of looking to go higher after a couple of really indecisive days. So some upside momentum here could really really get going. Uranium. Kind of got a bit of a bear flag going on in most of the uranium stocks. So it'll be interesting to see which way that resolves. You know, another bear flag here in URA, the ETF, Cameco. Got that sort of downsloping bear flag. Uranium Energy Corp. Kind of, you know, another downsloping bear flag. DBC, the sort of general commodity ETF, you can see, you know, that broke out the top of this triangle that we were watching. It's pulled back, broke down below that uptrend line, but only very briefly, and got back in it. So this looks like it's going to continue to grind higher. You know, we want to watch this trend line and see if this stays intact. But so far, so good on this. I mean, it had a red day on Friday, but compared to everything else, not that red. DBA, the agriculture commodities ETF. You know, this it's still kind of rolling over. We're building a little bit of a base here that's a little bit like a bear flag. But we've got a fair bit of support underneath this as well. So it'll be interesting to see what happens here. It had a very sort of volatile or wide range day on Friday. So we'll be watching, you know, which direction does this break out of the base. If it breaks out to the downside, does it find support or not? And MOO is the agribusiness ETF, and this had, you know, you can see week before last was, you know, terrible couple of days for it, and is now building a base down here. Can this break out to the upside? It's been very well behaved inside this range, so I suspect when it picks a direction one way or the other, it could move very sharply. Corn is continuing its grind higher. You can see it's, you know, it had this nice uptrend, had a little bit of a pullback, and has resumed the uptrend. No reason to think that this won't continue its uptrend. Soybeans, similar. Look to be continuing the uptrend. Slowed down a little bit here, tiny bit of a concern. If I were gonna play an agricultural commodity directly, it would be corn, not soybeans. And wheat. Wheat looks to be falling out of this rising wedge, and we would expect it to fall out the downside of this rising wedge. So this is doing kind of what we expect to see. All right, so that's enough of the commodities. Let's get into the equity sectors. And we'll start with energy. Energy's messy. We've got a bear flag. You're going to hear me say this a lot today. Bear flags everywhere. Almost every single chart we look at today has a bear flag on it. But you know, one of the, as far as this goes, compared to a lot of the regular equities, this is looking a little better, right? Crude oil Looking a little indecisive here, trying to grind higher. Be interesting to see if this can break out to the upside. We talked a little bit about that earlier, right? Some of the things we can look at with this one, or commodities in general. XOP, the oil producers, we have a bear flag. So it be interesting to see what happens. If it breaks out of here, does it find support at this trend line? Does it, come down and find a support in around here in the 100-day moving average? Or do we get a move to the upside on this? I'm kind of leaning towards a move to the upside. Just like, we talked about with the dollar index, right? I think that's going to roll over. If that rolls over, then oil should go up. This is the oil services ETF. And again, if oil goes up, this is going to break out to the upside. This is a really nice looking bear flag. We would normally want to play this to the downside. Occidental Petroleum, is kind of showing that bear flag, right? Right under this uptrend that it broke down from. But, it doesn't look awfully unhealthy either. It's being supported nicely by the 50-day moving average. So on the fence about which way that one's going to go. The most bullish looking charts in the energy space are coal again. Coal, had this a couple of really bad days, really nice reversal, and unlike the equities indices, they managed to do a little bit of continuation off that reversal day, and are now drawing a bit of a bull flag. So, we can expect to see a break to the upside on this, and I'm trying to decide if I want to play that bull flag or not. I'm definitely going to be watching it, but I'm on the fence about playing it. I'm just not trusting a lot of breakouts these days. So many breakouts are failing. Consol Energy, CEIX, is another one of the coal companies that we've been watching. And look at this. I mean, it looks ready to break out of this. This is probably a better play than Arch. We probably want to tighten things up here. But this looks like it. This looks like it go on Monday. But again, be careful because a lot of breakouts have failed. Metals and mining. Another bear flag. Nothing else to see here. Industrials, kind of a big messy bear flag. I mean, this had a really ugly day on Friday, and it's coming into these lows here. If it drops this, there's a fair bit of dead airspace here. And again, we've got that gap that we've seen on some of the other charts that goes back to November of 2020. Industrials could get really weak here if this whole market starts to roll over. Consumer discretionary coming into a really important support level. Does anybody think that support's going to hold? We've seen support levels breaking. If the market's down on Monday, this support's going to break. I'm sure of it. So we need a bit of a miracle for discretionaries to start their move back up. And within discretionaries, we have the retail sector, and we can see that has already broken down out of a nice triangle pattern. Continues to move down and is now pretty much testing that pivot low from February. And there's lots of room. There's lots of dead air to the downside. So if this breaks down out of here, this as it looks like it's doing right now, this has a lot of room to move down. Costco is one of the big players in that space. It had a terrible day on Friday, down 5.5%. That's a huge move for Costco. What's its an average day for Costco is around 3%, and so for it to move 5.5%, that's a big move. This looks like it's going to continue down. Now, does it stop in around 500? We've got the 200-day moving average at 505. We've got psychological support, and what is also shown as support on the chart in here at 500. I think it's a pretty safe bet that 500. Oops, let's go right there. I think it's a pretty safe bet that 500 catches it. Maybe even 520, 525, this level right in here. So, yeah, I don't think we're going to see another big ugly day like that. I think we see it kind of come down and start to turn back up or go sideways, either here at this 520 level or at the 500 level. So that might be something we can watch for an opportunity, but we want to watch for a setup, to go to the upside if we want to get into this. Because, Costco is a great company. I think there's no reason to believe an uptrend in this won't continue over the long term. So this is something that, we do want to look for opportunities to get into. But we want to be careful right now because the market is not telling us to buy anything. The market is telling us to be really careful. So that was Costco. What do we got? Financials. Financials broken down through a really important support level at 35. This is not good. Materials, nice looking bear flag here. If I'm allowed to call bear flags nice, but this is a classic bear flag. This looks like it's going to break down. Nutrien is one of our favorite companies. I mentioned that when we were looking at earnings. They've got earnings coming up. Look at that. There's another nice looking bear flag. Is this going to break down? Is it going to find support in the 200-day moving average? Maybe at the 100-day moving average? But yeah, it sure looks like this is ready to break down. I think the only thing that saves it, like I mentioned earlier, is that dollar index. If the dollar index continues to roll over, we might catch a break here with our Nutrien. Technology is going to look awful, right? Technology is at a really, really important support level. It broke down through on, I think this was Tuesday, reversed, went up, and then has reversed again. And, big reversal day, right back down into this support. This support is being tested way too much. And when support gets tested this much, it breaks. It loses the support. Now, if this loses its support, where do we come down to? So what are we at now? We're at like 141. No brainer we come down to 130. Do we come down into the 120s or even the 110s? Quite possibly. It could get really ugly in technology because, some of these tech stocks, these big tech stocks like Apple, Tesla, Amazon, Google have been holding up the market, and they're all starting to roll over. We'll look at those in one sec. Semiconductors, not pretty. Rolling over, trying to find a bottom here, though. They're not completely breaking down yet. We really want to see some of this support somewhere along the way down here hold up, and maybe AMD with their earnings, maybe they come to the rescue. If not, if AMD's earnings are bad, we're probably going to lose this 222 level, and then we've got another whoosh down. Communications sector, the same as tech, has rolled right over. At an important inflection point here, really important support. Looks like it's going to drop that support and continue to, it's on the way down. So let's look at some of the FAANGS, or I kind of prefer to call them the fan mags, or whatever you call these, Facebook. So this is interesting here. So Facebook had their earnings, gapped up nicely, and are trying to hold that gap. We should probably draw this gap in here. So somewhere from here to, it gapped up to there. We've closed part of that gap. Well, we closed part of the gap on this day, actually, so we'll just draw that there. But there's still a big gap here. So do we come down, do we roll over tomorrow and then test this low? And if we do test that low, it really needs to hold. Otherwise, we're coming down and probably going to fill this gap. So Facebook should be interesting to watch tomorrow. It has the potential to kind of be leading the market. Apple with their earnings, they had their earnings after hours. They popped up, somewhere into around this level up here. And then later in the conference call, they talked about, and everything was looking great. They had excellent earnings. They beat. They're going to do, Going to do increase the dividend, I think it was. They're going to do a share buyback. All of it good news. And then in the call, they talked about supply chain constraints, and it started to drop off, and it continued to drop the entire next day. And we're coming into this trend line now. So we really want to see Apple hold this trend line. It's kind of the last of the FAANGS, or the last of the big tech stocks that's sort of holding up the market, because it's such a big piece of the market. If we see this roll over, we're going to see the SPY, the SPY ETF, the S&P 500 index, the NASDAQ index. They're all going to roll over big time. So really interesting to be watching what happens with Apple over the next few days. Amazon's earnings were terrible. They had this giant gap down, and they continued to go down. Now, they did have a little bit of a bounce, but this is ugly. This is really, really ugly here. We should draw this gap in. So we gapped to right there. Well, it gapped all the way down to here, right? It opened down here, and then we closed up in here. So we closed some of that gap at least. But yeah, there's still a big gap here to be filled. It closed at a previous resistance level, this 2600. So tough to say where this goes on Monday. This should also be watched closely on Monday morning, because it can be a market leader as well. Netflix on Thursday looked like it was going to try and claw some of this back, and then it rolled over again on Friday. So you really got to see this 187 level support, and look how far back we've got to go here. For this level, we're back into 2017. The end of 2017 is where we've come back to. That's brutal. We do not want to see these other FAANGs start doing that. We don't want to be looking at the 2017 level on Apple. And I'm not saying that's going to happen either. I really don't think that will happen. But we have more downside in these, and I think that Google's a perfect example of that. It lost its 2,500 support, came down, tried for a couple of days to put a bottom in there. That one fell apart, and it looks like it's rolling over again to continue lower. Probably come down and test this 2,100 level or the 2,000 level, and then we've got a gap down below that. So not looking pretty for Google. Tesla. Tesla's dropping levels just like Google was. Disguise the Sky and myself pointed out, Disguise the Sky pointed this out on a very short-term chart, and I pointed it out on the daily. I think it was Sunday night or Monday. We were looking at this level here, and that broke down, and it broke down hard from there. And it tried to find some support here. It poked through that and got it right back. So that this candle here is bullish, right? This is a hammer candle. It broke through the support level, came back, retook it. But then on Friday, it tried to go up. It got rejected by this 50-day moving average and pulled down an hour right at that support level again. So this doesn't look good for Tesla. This looks like it's ready to roll over and come down and test some of these previous levels. The March 2-day low there, or this February low. So we may see the 700 level on Tesla. I have an alert set there because I think that this is a really good level. This could be an area where we want to watch for a bottom and a turn back up. Like I said earlier, though, I'm not buying anything until I see proof. Healthcare breaking down. It's got that weird downward sloping bear flag, though, but it did kind of break out of it a little bit on Friday. Should be, there are support levels down below here. There's this one here that should support. Even this here, we should, I don't know, maybe not. And then we've also got what should be fairly strong support down here. So healthcare has not given up the ghost yet. Pharmaceuticals, These are sitting right on support. So that's got to hold, because if it doesn't, we're moving down quite a ways here. That could, we could easily say an 8 to 10% decline if this support breaks, and that's in the pharmaceuticals. Biotechnology is already broken down through important levels, and it looks like it's coming into test. This pivot low from COVID. Healthcare providers. This was one of the stronger areas within healthcare, and that rolled right over. It tried to break out a new high and failed, and it has just continued to fail. I think it's had one green day, maybe a slightly green day, since this decline started. I don't see anything stopping this yet until maybe we get down into this 256 level. That one area within healthcare that was doing really well has completely given it up. REITs are not looking great, if I remember correctly. So REITs have rolled over, have a really bad day on Friday. Why is that updating here? There is some support below, though. So it'll be interesting to see. And REITs are a more defensive sector, so we should expect these to go down slower than the overall market. Another defensive sector is the consumer staples, but you can see that these have started to roll over now. Big ugly day on Friday. Does have support below. We've got these, rising moving averages, the 150-day moving average below here, plus this right here. I mean, this was a 76 level. Should be reasonably strong support if it comes down here. So that's an area to watch for support on that. Utilities, these have rolled right over as well. These had been really strong and completely given it up now. It's interesting to see that we've come down to what do you call that? Not the pivot, the apex of this little bull, or this bull flag pennant, and it's right at that apex right now. Now we expect this to act as support. So it'll be interesting to see if that turns up. Certainly doesn't look like it's going to act as support right now, but you never know. I mean, maybe this was capitulation in utilities, and these start to turn up again. If not, we've got some moving averages below, but I don't know. I mean, the 200-day moving average, probably where we end up if this breaks. And finally, let's look at the home builders. These look like they're on the edge of destruction as well. We're at the support level. If that fails, these are easily losing another 10%. That's all I've got for you. Not a lot to be bullish about out there. There's certainly a lot that's telling us to be really careful. Be very, very careful this coming week. And again, we've got, let's go back and look at that calendar again, because there are so many important events this week. But the big one, Wednesday, FOMC statement at, I think it's 2 o'clock, and then the press conference at 2:30, and then we've got those non-farm payrolls on Friday. So what else have I got for you? I'll give you guys a sneak peek. I don't think the calendar's been published yet. I might get in trouble for giving you guys a sneak peek, but here it is. Next Sunday, I think Nick's releasing a video, a fundamental video. A week from Thursday the 12th, I'm going to be doing Ticker Talk, and then I'm going to be doing a educational session on the Thursday after that. We're going to look at doing DCA, dollar cost averaging. We're going to look at some ways that we can do timing on that, both a seasonal type timing. We can look at filtering it with the MACD and some other indicators, so that you can, if you do, dollar cost average into indexes or even to individual stocks or sectors, I think you can be more efficient with it, and you can use filtering to sort of keep you out of the market or to keep you from putting more money into the market when we're in bear markets like we are now. So I think a lot of people will find this session really interesting on Thursday the 19th. And we've got something really fun coming. We'll talk about that later. So I hope everybody enjoys the rest of your weekend. And, like I've said a number of times, just be careful. This market is really volatile. We're going to have strong moves in both directions. And we just need to be patient and careful, for the next little while here. So have a great night. Thanks, everybody.